Gold and silver prices peaked in early August and have now begun a corrective period to work off the excess optimism that was generated following the Fed's commitment in March to do whatever it takes to get the economy going forward. So what's going on with gold and silver prices today? We're going to be asking my guest here on StansberryInvestor.com. He is a fan favorite and he is back, Lawrence Lepard. He is a managing partner over at Equity Management Associates. Lawrence, always good to be with you. Welcome back to StansberryInvestor.com.
Yeah, likewise, Daniela. I really appreciate you're giving me a venue to speak about what I believe in. You guys do a great job. So I've been doing this for 12 years in this space, and this isn't all unusual. I know a lot of newcomers are kind of freaked out by how brutal the gold pull down has been. And I'm kind of like, yeah, okay, seen, been there, done that. It doesn't really concern me a great deal. Obviously, sentiment was lopsided in, August 2020. One of the things that's going on here is it's very hard to work through prior highs. And let me give you an example. Back in 1980, the gold high was 800. Then there was a 28-year period. And in 2006, they got close to 800 again. 2008, it broke through 800 again, but then it went up to 1,000. But then it came back and went under on the GFC. And so an old high becomes kind of a tough thing to break through. And if you notice this time around, and by the way, after it went back down to 700, a year later, it was 1,000. It took off like a rocket to 1,900. Okay, so we hit a high of 1,900 in August of 2011. And so that's a meaningful thing because that was quite some time ago. So 9 years ago, we hit this all-time high. And here we are, we hit, August of 2020, 9 years later, we hit 2080. So we took out the all-time high, which is a big deal, but it didn't last, right? And so when you get to these, these big all-time highs, it takes a couple attempts to get through. I think we'll probably get through on the next one, which I think is coming, sometime in the next few months. So, we exceeded it at 2080, and now we've got kind of a 35% correction. And to me, that's pretty standard stuff. We're going to take that out. And when we do, it'll be meaningful because at that point in time, I think there's still some people who doubt whether the gold bull is real. They believe the Fed narrative and they think, oh, they're going to get it all under control. It was just temporary based on COVID. They'll change their thoughts. They'll go, oh, all-time high, I get it. What's the next target? 2,500, 3,000, 4,000, et cetera. When I talk to mining analysts in Toronto, there's still a lot of guys are modeling kind of, $1,500, $1,600 gold on mines they're going to build. I don't think that's relevant. I don't think we're going to be there. I think we've either hit the bottom or we're close to hitting the bottom. I mean, you can't call these things to the day or month, but you can get the big picture right. And so let's talk about that. Why is the big picture right for gold? And it is because the conditions are just perfect. We've got too much debt. The Fed is completely trapped. Real interest rates are negative. They'd be even more negative if they counted CPI correctly. The Fed's monetizing deficits to the tune of 120 that they've announced, but as Luke Groman intelligently points out, in February, they actually monetized $160 billion. So they're already doing yield curve control. They're just not telling us that they're doing it. So, we've got these signs of a crack up boom going on everywhere. Houses year on year are up 15%. That's even bigger than in the housing boom. The January US housing prices were up 15% year on year. So, the market and the market smells this, right? The market smells inflation, which, today, another day of bad 10-year pricing, the 10-year is up to 1.74. And when this whole thing started, the 10-year was at 50 basis points last summer. Yeah. So, basically the market is saying, Fed, you got an inflation problem and you got to deal with it. You got to deal with it soon. Now, the fascinating thing is that the Fed has constructed, we live in a world of narratives, right? I mean, it's kind of like, we all have different versions of the truth, but it's like, what do you want to tell people is the truth? Well, the Fed narrative is everything's fine. And this inflation is going to be, I love this. This is going to be transitory. That's the new Fed, drinking word, transitory inflation. Of course, we're going to have some inflation. We're coming out of a pandemic. Don't, ignore the man behind the curtain. The fact that gas is $3.40 premium, don't worry about that. I mean, I went to Cleveland for a friend's funeral a week ago, and I had to rent a car. It was $120 for the smallest car with no additions to it. $120. Why? Because Hertz went bankrupt, sold off all their cars. I made a late reservation. They probably only had 10 cars left, and they charged me whatever they could get away with. Huh. So, the argument that these guys are making, and this is the other thing. I watched the Powell testimony very carefully, in front of the House and Senate. And, he says, we have the tools. We have the tools to deal with this. I wish some senator or congressman had asked him, oh, really? What are those tools? Because the only tools I can imagine are draining liquidity or raising interest rates. And we know what happens if he does that, because they tried to do it, repeatedly kind of from 2016 to 2020, early 2020, when we had the pandemic and we had the repo blowout, we had the IOER blowout, et cetera. So they can't do that. They are totally, totally trapped.
The tools are more money printing, Lawrence.
We have the tool, right? We're going to print more money, right? So what I think is going on is, the market is saying to the Fed, check to you, and arguably it's checkmate. And the Fed is saying, no, we got this under control. Trust us, it's all under control. And to me, what this reminds me of very much is in the movie The Big Short. You'll recall there was a period where they've got the trade on, and they've gone and they've seen the strippers who have 6 houses and all that stuff, and they know the thing's a bubble. And the news starts to come out that it's a bubble and it's bursting, and it's obviously bursting. And the marks start going against them. And they're like, what the hell? We're so clear that we're right about this, but, the marks are going against us. It's similar to where we are today. We have got unbelievable, massive, money printing. Since the last time we spoke, they passed this 1.9 stimulus bill. I think we actually spoke before they passed the 900 stimulus bill. Right. So we got $2.8 trillion that's just been injected into the economy. That's ridiculous, right? Gold should be at $5,000, right? And it's going down. So all of us gold people are going like, we're ripping our hair out. Like, what's wrong with this picture? And I just have to laugh because we're going to get paid, and we're going to get paid huge. But right now, bull markets try and throw everybody off. And, the bullion banks are doing their thing in terms of selling at odd times when there's no liquidity. And, Powell's got a big grin on his face about how they think they're winning. And, they're about to lose. They may think they're winning, but they're not.
Okay, so you packed in a lot of great information right there. And I want to try and break it down and go back to what you said at the start about, people looking at the gold price saying, okay, great, gold hit 2,000. What's next? 2,500, 2,700, 3,000. But at the end of the day, it pales in comparison to the returns that we've seen from Bitcoin. And coupled with that, you mentioned the stimulus checks. Where will a lot of people be spending that money? How much of it will go into Bitcoin, Ethereum? Yeah. Are they thinking about gold? So the question is, is Bitcoin
killing gold?
Yeah, is Bitcoin killing gold? And I didn't want to use the word killing, Lawrence, but yes, is Bitcoin killing gold?
That's a super question. It's on the peak of everybody's mind. Let me tell you how I feel about Bitcoin. I love them both. Okay. So, and I hate it when both sides fight because there are merits to both. They're different. Gold is 5,000-year-old money. It's a bearer form of money, and it's great. It's God's money. Okay. I get it. But those who dismiss Bitcoin, I think, are making a big error because it is a significant technological development. Let me talk about that. Okay. Bitcoin is, forget about all the emotion, forget about all the, the hornets and the, there's a lot of craziness around Bitcoin, but here's what it is. It is a stunning technological innovation. Until this mathematical and cryptological solution, there was no way to have digital money without having a double spend problem, to have secure digital money. And these guys, over a series of years and a bunch of failed attempts, they managed to perfect that thing, I believe. And to me, here's the analogy I use. So Gutenberg created the printing press, and he created the people's written word, okay? And that was really important because it basically felled the Catholic Church, okay? The internet came along, and it created, easy information for anyone, and that created the people's information source, so that no longer did you have to take the news from the New York Times and believe it when you knew they were lying, right? And then Bitcoin has come along, and it's created the people's money. This is a form of incorruptible money that no government can F with, and that's a really important thing. And people who ignore that, I think, are making a mistake. Now, to the question of, is Bitcoin hitting gold? Let's talk about the big picture for a minute, okay? I've said this in the past, and I'm trying to clean up my language because I've used the S word, but there's stuff, okay? There's 400 trillion of fiat stuff in the world, okay? It's called cash, savings, deposits, bonds, stock. Take all of that in the world, add it up, it's 400 trillion. I've seen slightly round numbers for the point of our exercise. There's 300 trillion of real estate assets in the world, but let's set that aside because that's a real asset, okay? There's 400 trillion of fiat stuff in the world, okay? Our stuff, what we call sound money stuff, is gold. There's 10 or 11 trillion, but some of it's in antiquities that won't be melted down, and jewelry. I'm kind of assuming maybe half the jewelry is at risk of being melted down. And if you take the jewelry plus coins and bullion out there, you've got $4.5 trillion worth of stuff. you've got about $1 trillion worth of mining stocks, and you've got about $1.1 trillion worth of Bitcoin. So if you add all that up, you're at $6.5 trillion of what I call sound money stuff, okay? So 6.5 on 400 is 1.7%, okay? So some of the 400 is gonna come after the 1.7, okay? You know, question is, where's it gonna go? Is it gonna go to gold? Is it gonna go to mining stocks? Is it gonna go to Bitcoin? It's gonna go to all of them. Now, it may go slightly more heavily to Bitcoin in the millennial group, but it's going to go to, you know, gold in the boomer group. And here's the thing, and this, you know, Michael Saylor, who's a big Bitcoin advocate, makes the, you know, thing, you got to be brain dead to buy gold, and gold is going down, and gold makes no sense. If you buy it, you're an idiot. You know, forgetting the fact conveniently that gold has never had an 80% drawdown, okay, whereas Bitcoin has had 3 of them, all right? And here's the point, Saylor, you know, there's 400 trillion out there. A lot of those people don't even understand gold, much less Bitcoin. And you think they're going to come in and just put all that 400, or let's say 10% of it's coming our way. You think it's all going to go into Bitcoin and none of it's going to go into gold, especially when a big part of the 400 trillion is managed by boomers? I mean, yeah, the millennials are like, oh yeah, it's all Bitcoin. It's got to be Bitcoin, right? But yeah, it's just not going to happen.
So that's a good point. And when I brought up that question to Saylor, you know, his answer is, well, you got to zoom out. You know, you got to zoom out and look at the bigger picture. But I hear what you're saying. I mean, an 80% drop. Look,
he may be right in a 20-year time frame. I'm not arguing that, okay? But what I am arguing is that, you know, if you look at human nature and you look at human adoption, you got 5,000 years, 6 billion people who know that gold is money. You know, you've got 10, 15% of the world who understands what Bitcoin is, right?
And that said, I want the folks at home to clearly understand you are not a Bitcoin hater. So please save those comments, because you've recently upped your allocation from 2.5% to 10%.
Yeah, no, it's up from that substantially. And I'm adding to it, even at 58,000. I've grown stronger in my confidence that Bitcoin is really important.
Right, so you see a role for both. That is clear as day. You've also said that gold is cheap and mining stocks are even cheaper.
Oh, cheaper. It's unbelievable. I mean, that's another interesting thing. So I recall, I mean, my fund had some good numbers for 2 years in a row. I want to brag about them, but they were good. And I went out to people and I said, hey, why don't you invest in my fund? And they were like, oh my God, it's too late. It's gone up too much. You know, I mean, right? I mean, it's in the money management business, you're damned if you don't. If your numbers aren't good, they say, well, your returns aren't good enough. If your numbers are good, they say, oh, I missed it. Well, guess what? There's a big pullback here. I mean, I've got stocks I'm buying down 50% from where they were in August, and some of them are 3 times cash flow. So there's enormous opportunity in the miners, just enormous. So, you know, it's you know, you got a lot of good things that can happen there. You know, their production can grow, the price of gold can grow, and their multiple can expand. So you add those 3 up. I mean, I'm looking at things. My threshold is kind of, I don't want to be in a name unless I think it can be a 5-bagger within a 3-year time frame.
Lawrence, I didn't get your thoughts on silver. What's your play on silver?
Love silver. Same story. I mean, it's gold with higher beta, obviously. There's not a big stockpile of silver sitting out there the way there's a big stockpile of gold. And it's got a lot of important uses, and it's relevant in ESG and all kinds of other stuff. So yeah, I love silver, and we've got a pretty heavy weighting in silver. The problem is it's tough to find primary silver mines. I mean, it just aren't that many of them. And because of the risks in the mining business, I have to be diverse in what I own. I've got to own, you know, a number of names. I can't have 3 stocks in my portfolio.
Okay, I have so many more questions for you. You know, what are your thoughts, and what about this push on battery metals and the need for clean energy?
I'm sure they're great. Yeah, look, I'm absolutely sure they're great. I'm absolutely sure they're important. I know they're cheap. I also know uranium is cheap. Frankly, I think some of the gold, oil and oil, you know, processing companies or you know, E&P companies are cheap. You know, I have to stick to what I know and stick to my knitting. I mean, it's hard enough for me to follow all this gold and silver stuff. And I mean, this is a challenging market, right? I mean, and these companies are very, you know, they're challenging. You know, there's risk involved in all these. So I just haven't really gone a stream from gold and silver. I'm sure there's a lot to be done in other kinds of metals that are very relevant to the batteries. I know there is. I haven't taken the time to educate myself and go there. So,
Lawrence, I'd like to wrap with a quote from your recent newsletter where you say, if stock market highs in the face of record unemployment, business failures, and economic pain strike you as unjustified, you are not alone. How do you think it plays out for the stock market here this year?
I don't know. I mean, it's really hard to figure out. I mean, if, you know, go look at the Weimar stock market, go look at the Venezuelan stock market. And don't get me wrong. I don't think we're necessarily going to follow either of those cases to that degree. I really don't. But I do know that, you know, in an inflationary market where the bond market is suppressed, you know, right now stocks are really the only place investors can go. And they've worked for so long as a result of falling rates. And now if we do yield curve control, which I think we will sometime in the next 6 months, perhaps sooner, you know, then, you know, stocks are really the only game in town. I mean, you're not going to get a gain out of your bonds because they'll control them at a certain level, but they won't go any lower. I don't think they're going to let rates in the US go negative. And so, you know, it's really the only game in town. So, you know, I've lost a lot of money in the last 5 years shorting stocks personally, just, and so I'm done with that. I prefer to play it by being long this other stuff.
Lawrence, I'm curious to know how you're playing cash, investing in cash via gold right now.
Well, I'm an aggressive manager, and my fund doesn't hold any cash, and personally, I don't hold much cash. And honestly, I think that gold and silver are a better form of cash. I mean, some people say, well, there's a deflation argument here. What are you going to do if everything collapses? And you know, that is entirely possible. In my view, in that case, I want to own cash in the form of silver and gold because it's undilutable cash. You know, we know what it is and they can't print it. Because, you know, I'm operating under the assumption, perhaps incorrectly, that the government with a printing press, you know, I'm taking Bernanke and everyone after him at his word that with a printing press, the government is never going to let deflation happen. The deflation alternative is just too unpleasant for them to let happen.
Okay, one more point. You brought up gold and how it's not necessarily at the price that many investors would want it to be at, oh, yeah. But the appetite for gold and silver is still very much present. So the question is, Lawrence, people want to know is when will that price be reflected through gold?
Tell me when the paper market's going to break, you know? I mean, that's the answer to the question, right? I mean, you know, yeah, coin sales are up 700%. You know, I tried to buy American Silver Eagles the other day. They were $42, you know, on a $26 spot. I mean, it just goes to show you that the paper markets are quite powerful. We don't have any regulatory authorities, CFTC, others. We've got, you know, tons of banks who've been fined, you know, billions of dollars for manipulating this stuff. And, you know, it is what it is. I mean, eventually, I mean, it's really starting to happen. The paper and the physical market is going to separate, right? I mean, yeah, silver's $26, but go try and buy some at that level. I mean, I guess you can with P-Silv and you know, the Sprott thing, but it's pretty hard, you know, or maybe if you're, you know, taking delivery of a COMEX contract. I did that once, by the way. It's enormously painful to take physical delivery.
And wholesale spreads on 1,000-ounce silver bars close to $1 here.
Are they really? I didn't realize that. That's really high for wholesale. Yeah. Yeah. No, they used to sell at pennies over. Yeah. Yeah. I mean, it's a paper market. There are probably 300 claims for every real ounce. You know, I think of it, it's like musical chairs, right? I mean, the music will stop and some people aren't going to have a chair. You know, the other great analogy I love here is the Fed is the man who jumped off a building and he thinks he can fly. And he's passing the lower levels right now because they're going to get a rude awakening. And you know, this shit pisses me off and I'm annoyed by this gold price, but that's really all I am, is annoyed because they are losing so big time. I mean, it's obvious.
Well, Lawrence, I think you are expressing the views of many of our viewers and investors watching. So come back anytime.
Happy to do it. I always love your questions and I really appreciate the venue. Thanks a lot, Daniela.
All right. Well, thank you so much. And thank you for watching. We'll have much more for you. So be sure to stay tuned to StansberryInvestor.com. In the meantime, remember to share us where you watch us. That's it for me. I'm Daniela Cambone.